Saregama reported a very strong quarter with both sequential and year-on-year revenue growth. Sales jumped 46% YOY and 20% sequentially to the highest ever quarterly revenue of 180 crores. A significant rise in operational costs eroded fourth quarter margins sequentially, but it still remains slightly better over Q4 FY21. The strong revenue growth was highlighted by the film and TV segment, which grew 1.5x YOY and 2.4x sequentially. On a year-on-year basis, music revenue also grew sharply by 25.5% but fell sequentially by 4.7% to 127 crores as Q3 is typically a strong quarter for the company and hence lumpiness impacts sequential growth in Q4. In terms of segment margins, music segment margins came in 185 basis points lower on a QOQ basis and 68 basis points down YOY at 45.9%. Film and TV segment margins were 41 basis points higher than Q4 FY21 at 14.1%. Caravan unit sales rose 1.8% over last year but 20.6% lower on a seasonally strong Q3, coming in at 1.12 lakh units. Total caravan units sold by the company jumped 16.6% in FY22 to 4.01 lakh, which remains less than half of the units sold back in FY19. FY22 music listening revenue grew by 26.3% and accounted for around 62% of the total sales. Q4 EBITDA margin stood at 28.5%, 760 basis points lower than Q3 but 70 basis points above Q4 FY21. Net profit grew 11.1% sequentially, coming in at 48.2%. Net margin came in lower QOQ and YOY 26.7%. EPS grew 16.8% YOY and 6.1% QOQ to 2.5 rupees. Saregama continues to focus on music IP and acquired 1500 plus songs from 280 Telugu films from Mango Music. Further, it digitized around 10,000 plus retro music IPs under its in-house project, taking the total music library to over 142K. Music IP expansion grew at a CAGR of 8.8% in the last 2 years. Management indicated that caravan business has broken even. Similarly, the films and TV business has touched a run rate of 100 crores and is expected to maintain a margin of 15% level. Within this, Yodlee film has also turned profitable and hence likely to contribute more to the bottom line going forward. Saregama management sees a 20 to 25% revenue growth in FY23, which appears reasonable and in line with the history of guiding conservatively. In addition, a foray into the live events business at 5 to 7% margin potential is also a good development. According to FICCI EY Media and Entertainment Report 2022, of the 200 million active monthly users on music streaming apps ex-YouTube, only 1.5% or 3 million are paid subscribers, and that number is expected to reach 7 million by 2024. Paid subscription revenue in India accounts for a small portion in comparison to the US, where paid subscription accounts for 90% of the total streaming revenue. We believe Saregama has around 35 to 40% market share of India's recorded music industry and is extremely well placed to benefit from the streaming music growth in India. We estimate Saregama's revenue should grow at a CAGR of 22% and EPS should grow at a CAGR of 10 to 12% over the next 2 years. Since our last note, Saregama's share price has corrected almost 17% and now trades closer to growth-adjusted valuation. At the current market price, Saregama trades at an FY24 PE of 42.5x above international peers like WMG and UMG. Investors should therefore use the current market volatility to build a position in the stock.